Hello and welcome to EduFund. In today's episode, we have a very special guest with us, Amey Sathe. Amey is a fund manager with Tata Asset Management. He brings along 18 years of work experience. He joined Tata in May 2015 as a research analyst. He has previously worked with JN Financial and HDFC Securities. Qualification-wise, Amey holds a CFA charter from CFA Institute USA and has an MMS degree from Mumbai University. Welcome to the show, Amey. We talk about the newly launched Financial Services Index Fund by Tata Mutual Fund. So why don't you throw some light about the overall BFSI sector? And we have seen that BFSI as a sector comprises of almost 1/3 of any broad market index. So what is the importance of this sector in the economy and how do you see the future of this sector?
So BFSI, as you said, it's very, very critical from the economist perspective. And normally what you see in benchmarks is a reflection of what is happening in the economy. And for economy to do well, BFSI also has to do well. And if you see last 3 quarters, especially from India's perspective, GDP growth has been in excess of 8% plus. And since BFSI is a direct proxy or direct beneficiary of that growth, you are seeing a quite fair bit of a buoyancy in BFSI sector. And if you see the potential of BFSI, I think India remains a fairly significantly under-penetrated market. You may look at lending as a percentage of GDP, or you look at AUM as a percentage of GDP. I think where any parameter you look at, there is a huge scope for penetration to build up. And that also sort of is a very big positive from a BFSI sector perspective.
So when you talk about BFSI, it comprises of banking, financial services and insurance. And as you rightly said, India is very underpenetrated. Would you throw some light on the segments which are there in BFSI as a whole, and segment-wise, what are the growth prospects for future?
So BFSI actually has many elements, and I will divide BFSI into 2 parts. One is lending part and second is non-lending part. In lending part, if I see, you have banks, and within banks also you have fairly large market share taken by the PSU banks and private sector banks. Then there is a different types of category in terms of small finance banks or payment banks. So in lending you have banks, and these 3-4 types of banks that we have, and in the lending part itself, we have non-bank companies like NBFCs or housing finance companies or microfinance companies or infrastructure finance companies, which have their specialization in those segments. So that is a part of the banking sector, banking lending sector. And on the non-lending part, you have actually fairly huge gamut available in terms of, say, life insurance companies, general insurance companies. You have capital market players in form of, say, exchanges or brokers. Then you have RTA, then you have asset management companies. You have rating agencies which are listed. Now we have almost 3-4 rating agencies listed. So it's a very huge, I think, I will say BFSI is a very large segment, and you have multiple sectors available at this point. And luckily, if you see in last 3-4 years, most of the sectors that we have in BFSI have been doing reasonably well. You are seeing a fairly decent credit growth coming through. You are seeing a very healthy asset quality. You are also seeing a very sharp flows in capital markets segments. And you are also seeing a really record profitability coming through. Many entities have reported 4 to 5x or 6x jump in profits compared to 4 years back what they were. So clearly, I think sector is doing reasonably well, and if economy continues to grow at this speed, I think we are there for a very long, robust and sustainable growth trends in BFSI.
You mentioned about the asset quality. So could you throw some light on the asset quality or the NPL levels of both PSU banks and private banks? And how do you see that to change over the next couple of years?
Absolutely. So if you look at, say, 5 years back at a system level, you used to have a gross NPA of more than double-digit percentage. So we were somewhere around 14-15%. And as we speak today, we have a gross NPA at a system level, somewhere around 3-3.5%. So that kind of a sharp improvement we have in asset quality. And if you look at PSU banks versus private sector banks, so in private sector banks, there are a few banks, they did not have any challenges on asset quality, especially retail focused, but there were private sector banks which were corporate focused. They also have seen a sharp improvement in asset quality. So their gross NPAs used to be, say, around 8-9%. I know most of them at somewhere around 1-1.5%. Same story in PSU banks. I think their gross NPAs, their asset qualities performance has improved significantly. How do we go about from this level? Because probably we are one of the best period in terms of asset quality. If I split into, say, corporate, retail and agri, I think agri is more of a monsoon driven. If you have a good rains, I think you tend to have a good asset quality outcome. Corporate is something where we clearly see a fairly benign environment for next 1 or 2 years. Reason is that corporate leverage is still significantly low. We haven't seen corporates going ahead and borrowing in a big way from the banking sector. Corporate credit growth is just a 7% at this point, large corporate credit growth. So till the time that credit growth doesn't cross a 15-16% number, we shouldn't be too worried on credit quality. Retail side, you would have seen some actions done by RBI, especially on unsecured side. I think that was with a step in absolutely right direction, because most of the mistakes are made in good times, and these are one of probably very good times that we are currently in. So this was the right time to clamp down on some of the irrational exuberance that we were seeing.
Right.
But that was mostly coming from probably fintech, more of outside of RBI's regulation kind of entities. So clearly that was a good step in direction that sort of has we are seeing the very cautious approach adopted by regulator, and that is also helping asset quality to hold on. So many drivers, many levers, but I think for next 1 or 2 to 3 years, we see a fairly reasonable asset quality performance for the banking sector that we have.
Coming to the next segment, which you mentioned, is the capital market, where we have seen a huge amount of capital inflows, and people are actually moving to capital markets also to focus on the wealth generation. And India is probably seeing a very high SIP numbers right now, almost in the range of around 12,000 crores per month. So how do you see that growth to happen over the next couple of years, and how would you compare India's state currently versus the global economy, penetration of mutual funds, and not only mutual funds, overall capital market?
Yeah, I think the long-term drivers are pretty solid from capital market perspective. Probably in near term, you might have some issue with respect to probably overgoing in terms of over exuberance in say F&O trading or some of the sharp inflows that we would have seen. So in the near term, you might see some bit of a volatility. But in the long term, I think we are in a good place because the penetration levels are significantly low. So structurally, I think that segment remains fairly solid. But as I said, in near term, you can still see some bit of a challenges, considering last 3 years have been very good from a capital market perspective. You look at F&O volume, you look at SIP flows, you look at net inflows in the market in AMC business. I think we are probably in one of the best period currently.
And this was more on the growth side. How do you look at the valuations currently for the banks, and how do you look at the valuations for the non-banking segment?
Absolutely. I think that is a very important question that you asked, and thanks for asking, because I think at this point there is only one sector that looks fairly attractive, is BFSI, and most of the banks are trading, especially private sector banks, are trading below almost 15% below their last 10 years average. Probably some of the NBFCs or some of the HFCs are also giving you fairly healthy, attractive valuation. Only space where probably valuations are little stretched is, I will say, capital markets, because we have seen a fairly buoyant activity there.
Yeah.
So some bit of exuberance or some bit of irrationality in, for example, in case of some of the exchanges or some of the brokers that are listed, where we think valuations are slightly stretched. But otherwise, X of that, we think valuations are really attractive and really reasonable. In fact, BFSI is the only sector which is trading most of 90% of the stocks in BFSI would be trading below NSE's 1 year forward PE. So that gives us a very good comfort from a valuation perspective. And normally, from an investor's perspective, I think it is extremely critical to enter in a especially in a thematic fund. That valuation has to be attractive, because that is your starting point of investment, and your future returns is always a function of at what valuation you are entering in the fund. Yeah. So I think it's a good entry point in my view in a BFSI.
One question on the risk management, not at a fund level but more at a sector side. What are the steps the regulators are taking to ensure that the risk in the sector is minimized, at least the retail investors' interest is also upheld?
I think mutual fund is a very beautiful product. I think if you see our regulator, which is SEBI, I think has done a phenomenal job in terms of protecting investors' interest. I think that is a very critical step, and we continue to see actions coming from regulator that at any point of time investors' interest has to be taken into account, and that is getting protected every now and then. So I will say from an investor's perspective, I think mutual fund is one of the best vehicle to invest and go forward, and regulator is always there to make the sector more transparent, make it more efficient, and make it more investor friendly. and obviously in the end protect investors' interests. So I think we are in a good spot with regulator like SEBI that we have at this point.
One question on the non-capital market related segment, for example, banking and be it a bank or be it a non-banking financial company. Do you see regulators helping or maybe controlling the growth of the segment and coming up with the right policies at the right time so that at least the investors' sentiments are upheld there as well?
Absolutely. In fact, we didn't discuss this part. I think BFSI is one of the key investment argument to invest in BFSI sector is the role of regulator. I think probably we have one of the best regulator in terms of RBI. It's very proactive. And the way they have handled asset quality or they have sort of created a very balanced growth approach. I think what we will have is that may not have a periods of booms and busts, but we will have more sustained but very long period of very stable growth. I think which is a very good outcome from everyone's perspective.
So you mentioned about the future perspective from an investor's point and also exposure to the thematic fund. So how do you think an investor should play this kind of a thematic fund or a sector fund such as BFSI if they want to take some exposure in their portfolio? And what kind of horizon do you suggest for these kind of retail investors?
So first of all, it's a sectoral fund. So from an investor perspective, he has to be cognizant of risk that sector fund offers. So we always suggest that he needs to talk to his advisor because the fund has to suit his risk requirement. So accordingly, he can take a call. And we always suggest that from a time investment horizon perspective, I think 3 to 5 years is a ideal time horizon to invest in some of these funds. So that is how I will put it.
That's all from our side, Ame. Thanks a lot for sharing your insights, and I'm sure our viewers would definitely have taken some insights about the BFSI sector as a whole.
Many thanks for having me for this session. Thanks.
So ladies and gentlemen, that's Ame Sathe, fund manager from Tata Asset Management. I hope you like our content. For more such interesting videos, subscribe and follow our channel.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.